Matt, so here we go again. You sort of hoped maybe on Friday rebound in U.S. stocks, and now it feels like, oh boy, maybe here we go again, right back down that slippery slope.
It definitely is. I mean, markets are very jittery at the moment, just jumping at any headline that they can. It certainly seems, sell first, ask questions later. There's certainly no doubt about that. I mean, over the weekend, we've got geopolitical risks that are now back in the fall with Russian President Vladimir Putin saying he's going to be looking to deploy some tactical nuclear weapons into Belarus. That's putting, NATO members a little bit concerned there. I would suggest most of the world a little bit concerned there as well. But then also Neil Kashkari this morning Asia time, coming out and saying that the banking stress is increasing the odds of a recession earlier than expected. Now, people would remember that Neil Kashkari was probably one of the more hawkish members of the Fed last year. So his change in rhetoric is certainly going to have traders chomping at the bit, definitely, and certainly latching on to that R word, that famous R word there. So, I mean, given the month that we've had, it's certainly been the month of the haven asset, the Japanese yen and Swiss franc for sure in currency land. They're the best performing currencies among G10 peers so far this month, and I would expect that to continue through to the end of the week. I mean, market jitters are around, and they're going to be certainly around this week as well.
Yeah.
At the moment, things are quite subdued. People are just waking up, getting to their desks in Asia, but it's quite subdued at the moment. But I would expect things to volatility to elevate throughout the week, especially as we come into U.S. consumer data later this week as well, which hopefully should capture a little bit of that banking stress.
And some very important data as well.
We're also coming into retail sales and inflation numbers out of Australia as well, right? So that potentially could firm up these expectations. We're already seeing expectations of a pause at the next meeting, and about a 50% chance, if you take a look at what swaps trades are doing, of a cut from the RBA come July.
Yeah, definitely. Australia's data this week is certainly going to be interesting. There's no doubt about that. RBA Governor Philip Lowe has said that this data, the 4 points of data, particularly retail sales and the upcoming inflation data, will help the board's view when it comes to what they do at the April meeting. Now, the thing is, though, Australia doesn't have the same banking stress as what we're seeing in the US and Europe. So with inflation expectations to be above 7% year on year in February, you would hazard a guess that those bets for a pause in April and potential cut as early as July would have to be priced out. So we'll certainly see some more volatility in Australian markets later this week as well.